Welcome back to the channel, and if this is your first time you're coming across this channel, please do where to hit the subscribe button and don't forget to turn on the post notification so you don't miss out on any educational video from this channel. Okay, so welcome to today's class. Looking at the topic we have today, I have a few tests on the next slide, and we'll be looking at those questions. So look at the topic properly. Look at the topic properly so you'll be able to answer the next question on the next slide. So now let's go. Okay, welcome to the second slide. And in this slide, we have test. These are the test questions, and we'll take it one after the other. So the first question is, do you really believe order blocks are the key to consistent profit? The second question, have order blocks ever failed you in a trade you were confident about? The third question, if order blocks are so powerful, why do most traders still money? So now I want to know your thoughts in the comment section. You can also what drop your views in the comment section. Let's know and let's grow together. So now let's go to the chat. Okay, so welcome to third part. We'll be looking at what real life examples where we study the chart together, get to understand what why other blocks are not the holy grails. So looking at the chart before you, looking at the chart before you now, what can you see? So we'll start by labeling this chart, and you get to see why other blocks are not all you need, or the proper way you should actually take your trades while using other block. The do's and don'ts you should use while trading your other blocks. All right. So let me take you along why I get to mark this chart together. All right, let's mark this chart together now. So we had this last low, this candle week. So having this candle week, let's put this line at this point. We also have this high sticking out. So having this high, having this low. Now let's assume this was our last what break of structure to the downside, and this was our last low. This was the candle wick that swept this low. So we had a liquidity sweep before market continuation to the upside. So having this is our last low. This market coming into this zone, we had what a change of character at this point. So this is our change of character. After having this change of character, what do you notice? We had an impulsive move to the downside where we had what this other block right here sitting at this point. And what happened? The market came into this zone and what went down the downside. After the market reacted to this point of interest, this other block we had, and we had this retracement to the downside. What did you see? You notice there was what a liquidity creation at that point. Had this liquidity creation here, all of this. That's our liquidity. So that's our liquidity. We had another leg of price to the downside at this point. This entire move was taken out here, where we had another what change of character to the downside, showing what more bearish intent to the downside. So at this point, what can you see on this price chart? What can you see? It's a very, very simple question. Let's look at it together. So let's look into the smaller time frame or the most recent price action. So if you look at this point, we had what little change of character at this point. Here, that break of structure. Yeah. Where was our other block? A lot of persons will mark this as their other block. Because of what? You have this fair value gap. You have liquidity sitting at this point. You have our liquidity here. And what? You were expecting the price to come back to this point. I'm right. And that was what's on your mind. That's what you're thinking. So at this point, having this other block, no doubt, your other block met all the confluences we are looking at for, where you have what? Momentum present all the way down to this point, taking out what? Previous low. You have your what? Fair value gap at this point, and presence of liquidity sitting at this high. So you'll be expecting market to come back to this point to continue to the downside. You're not wrong, but let me show you why you are wrong at this point now. And that's what differentiates what a pro trader from a beginner trader. So taking out this other block, let me show you something. So if you look at the price action, you will see you still have what? A liquidity sitting above your other block. I don't know if you understand. Let me take that again. So you had your other block here. This was what you marked as your other block. And that is what beginners traders do. I'm here to explain to you why the other block hasn't working. So listen carefully. So having your other block at this point, you had all of the confluences you wanted to see and price retracing back to this zone before taking your trade. And you forget that you have liquidity resting above this zone. But the fact that you have a liquidity resting above your other block, that point of interest, this particular other block is invalid. That is it. And backtest it and see for yourself. This particular other block is invalid. And there is no way you want to place here stop loss. There's no way you want to have this size of stop loss, maybe putting your stop loss all above this candle wick. And you still see that what price still came into your zone, took you out before continuing to the direction. So this is number one reason why a lot of other blocks fail and a lot of beginners traders don't get it right trading other block. So what are you supposed to do? When you have something like this, when you have something like this and you have here liquidity resting above this point of interest, don't forget you also have what? This previous high at this point resting here. You still have more buy side liquidity resting at this point. That is one thing you also have to consider. You have this high, you have this second high. So what are you supposed to do? You're supposed to wait for what? Maybe probably a liquidity sweep of this entire zone or this liquidity resting at this high. Wait for a liquidity sweep. Then you go down to a smaller time frame. Either what? A 15 minutes or a 30 minutes time frame, depending on what best suits your trading strategy. So going down to a 15 minutes um entry confirmation, you will get to see the confirmation or get a proper confirmation that this high has been taken out and that's what you're expecting to forwards, looking for maybe entry confirmation of 15 minutes or 5 minutes, better 5 minutes to ride this trend down. And what will be your profit target? This will probably be your first target. This. So now you understand why what the other block has failing. You can go home, back test, come back, and you will see that there will be a big and better improvement in the other block trades. So let's look at another example. Okay, Welcome back to part 2. So let's look at second example here now. So this is a bearish movement to the downside. And what have you been expecting? Probably you're expecting you have what, an order block sitting right at this point. So let's first get to work, mark the chart, and get to see what we have and why we should take this as our order block or not. So to the beginners traders or to the pro traders that are still also making the same mistake, get it right today. All right. So we have this market. This was the last low we have at this point. This was the last low. And this was the last break of structure we had at this point. That was the last break of structure. And here we have our change of character. We have our break of structure showing that what price is still downside. We have another break of structure at this point. Having this break of structure, a lot of persons will already be thinking about this other block. I'm right, yeah? So looking at the price chart, saw this momentum to the downside, and definitely I know this is where you are marking as. Sure, this is where you'll be marking as your other block. And if you won't mark this point, other block, let me know in the comments the reason why you want this point as the other block. So looking at this point, why do you think this is a valid point? And for those also watching that think this is not a valid point, can you give me the reason why? 5 seconds. Why? Let me know in the comment section. Okay. So first, looking at this price action, what do you want to see? You want to see what? Momentum to the downside or to the upside, taking out what? Previous high or previous low. You want to see what? Fair value gap. That's present. First box tick. Second one tick. What do you want to see again? You want to see what? Price creating what? Liquidity before your zone. Was there anyone? None. Didn't have any of that. Now, if you look at from the first example we looked at, we see that what we have similar scenario lying before us here. Liquidity resting above our order block. Liquidity resting above our order block. And that's where a lot of traders get it. Having this type of price action before your order block without having what? Price creating what? An engineered liquidity before this point of interest. This point of interest is what? Invalid. This point of interest, this other block here, is invalid. Let me repeat myself again. This point of interest is invalid because of what? All of this liquidity, this trend and liquidity, or this descending liquidity lying before this point of interest. What are you supposed to do? When you have this type of order block, you shouldn't be looking at for any sell setup. Instead, what will you be looking for? You'll be looking for what? Sell confirmation. Actually, what? Push the price forward. And if you are to ride this price, the upside, what will you be targeting? This is what you'll be targeting. This liquidity resting at the top. Note it. When you have a zone before or you have liquidity line before your zone, take note. This zone can serve as your order. This is a warning. Those that stick to order block without understanding the concept. It's very, very important. Take liquidity concept into consideration while marking your order block. So please, next time you want to mark your order block, come back to this video, check if there are things you must guard for before taking that particular trade. Don't take that trade without coming back to this, actually check for notable stuffs that I actually marked for you. Because if you go ahead to continue trading your other blocks where you've been going about them, keep on looking. And that is what differentiates what professional traders from beginners. You still have some professional traders silly mistakes. So please, I want you to be all right. So if you enjoyed this episode, don't forget to what like and leave a comment below. And lastly, do well to share this video with your community, your friends, your family, so they also get to learn and understand this simple concept, smart money space. All right. Thank you. See you in the next one. Bye.